we're getting it out there.
Dude, that's awesome. I had no idea.
Yeah.
Loan bots. So what is that?
We'll talk about it.
Yeah, we'll talk about it.
We'll talk
I
about
want to
it.
know. Yeah.
Okay, so JC, we are ready when you are, my friend. Let me, hold on real quick. One more thing. I got to put this up to thank the people. Thank all them people.
Oh, all them peeps. Yep.
Well,
See, that's wicked. You've got all this at your disposal.
dude, it took a while to set this up.
gonna-
This right here, me and JC went to my storage unit and pulled out 2 desktops.
Yeah.
Popped them off the thing.
Look for something else.
Yeah, straight up. And literally went to Home Depot, built some legs, and boom, all of a sudden we had a table.
Isn't
And
that how discovery happens anyway? You know, you weren't looking for that. but
No,
it's
it was
done.
literally right before the episode with, we had Jeff, Robert Elder, who else? There was one other person, but it was like, we had to have it. We were doing it for the first time live. So
Yeah.
we're like, shit, we can't just do chairs.
Yeah. I like
And
how
then
you
from
stepped
there,
it up.
we stepped it up. Yeah.
Dude, you got the ferns. Oh man, you know. It's like,
Between 2 friends. I got the other one over somewhere.
dude.
That's awesome.
crazy.
Oh, JC, I'm ready when you are if you want to count it out.
Another episode of Key Factors podcast in 3, 2, 1. Trying to become a homeowner is so frustrating. I mean, I wish it were easy to find out what options or things I may qualify for.
There actually is an easier way. I'd love to tell you about it.
There is. Hold on, let me call you back. Okay, I'm interested. What's the catch?
There's no catch. If you have 2 minutes, I can literally show you now. It's really easy.
Sure, let's go.
Okay. It's going to coach you line by line and have you answer some questions that'll identify the best loan products for you, starting with the property address, which is specific to the area which programs will work for you. It's going to guide you through a series of numbers, loan options, and give you everything so you can choose what works best for you.
Well, I had no idea there was so many options out there for me. It was so easy, it was so quick, and you didn't even have to run my credit.
I know, I told you in less than 2 minutes, right? Did I make it?
You did. Let's go.
All right, let's go.
And welcome back to another episode of Key Factors Podcast Real Estate AF, where the AF stands for And Finance. And I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And it's good to be back, guys. I took about a month and a half off to focus on production. There is apparently not enough business to go around out there. I'm hearing a lot of grumbling and people saying that nobody's buying, nobody's selling, everything's sitting. But luckily for us, about a month in, I've got about almost 4 million in the pipeline. It's odd. And when we talk about going back to the basics in most of the discussions we've had thus far, it stands true. A lot of folks out there haven't had an opportunity to establish the basics because they got into the business maybe 2020, 2021, and it was like shooting fish in a barrel, so to speak. But I'm here to tell you, figure out, find a mentor that can teach you those basics and stick to it and then add what you want to it. But in this discussion today, I wanted to hone in on another topic that seems to be rising in everybody's discussions, but unfortunately or fortunately for us, it's not actually rising in numbers. So today we're going to be talking about short sales, pre-foreclosures, things like that with the expert. And without further ado, let me introduce my guest, Josh Boggs.
Wow. Well, dang, what an intro. I'm excited to be here. You guys are actually crushing it, as your wall says.
Yeah, man.
I was really, I'm like geeking out because I want to like take photos and videos there. I was like, dude, you guys are, it's a whole nother level. I just glad to be here, and really the expert thing, I love it. Somebody called me the other day like, oh, I heard you're the king of short sales. I'm like, dude, first of all, I'd never say that. I don't believe I'm an expert, but I believe I'm getting to that point where I'm always learning just enough to stay ahead of the casual person.
That's probably exactly what an expert would say.
Okay. Yeah, well, okay. Well, okay.
A student to the game and a student of the game. So Josh, there's folks out there that may or may not know who you are, but I want to give you a moment. If you could just tell us a little bit about yourself. Where did you come from? What are you about? All that good stuff.
Man, well, first of all, if you've seen me, I'm a 6'4", skinny, goofy bastard. I mean, I look, yeah, I get it. I mean, I'm not the greatest of lookers out there. I try, right? But no, I originally from Indiana. I moved down here when pretty much had $350 in my name. I thought I was going to play basketball, tried to do a walk-on at Purdue University. When I played basketball, our team was 16th in the nation at Anderson High School, Anderson Indians. And so I sat the bench. I didn't even get to play. In fact, fact, they cut me in my senior year.
No way.
So yeah, I was really upset by that. And anyway, just looking for just what to do. And a girlfriend broke up with me. Like I moved to my dad's. I was working in a foundry and working like crazy hours, like 80 hours a week. And it was the worst work you've ever seen. It was in a foundry, and you don't have them down here because it's so hot and horrible, right?
Yeah.
And then I just decided, you know what? She broke up with me on a Dear John letter, and I said, you know what? I'm moving to Texas. I don't know why, but I had family down here in San Antonio, and I wanted to learn from him because my uncle was like this business guru, didn't even finish like high school.
Okay.
And I saw how successful he was, and his whole family worked with them. And I go, man, if there's anybody that can teach me business, that's him.
Wow. So that is the number one cause of you moving here to San Antonio. And when you got here, what was that transition like going from Indiana to San Antonio, Texas?
Man, it's crazy. And I know we don't have enough time, and our listeners don't want to hear it all, but going from working for Dell Computers and starting from putting labels on boxes to becoming a QC manager.
Oh, wow.
At the age of 19. Because I saw how much waste was going out the window. And they're like, dude, get this guy in an office, which was awesome. With no college, right?
Yeah.
So then I ended up really the main turnaround was I was working after apartment complexes. I was a manager at the youngest age of 19 again.
Okay.
As soon as I came out of that for Westdale Asset Management and was managing Bandera Crossing and Vista Crossing back and forth. And then they demoted me because I went to spring break and got a hickey. I mean, I'm
was
19,
it a hickey
right?
from Kaniki?
Yeah, well, I can't kiss and tell, you know.
That's awesome.
So that really upset me. And then my uncle, who was running a nonprofit credit counseling company, had started to see, hey, look, you took off on the ground running, and you're taking care of yourself. So that was his test to get me on board. So I ended up becoming a licensed credit counselor, and debt management company, and financial counselor. By that time, I was almost 21. So did that, and that's really what got me into real estate, because at the time I was part of the financial education department of that nonprofit. Well, the IRS came through and just pretty much said, hey, we got too much of these debt management companies out there. We're going to eliminate them. And so for whatever reason, because my uncle had built most of the family on the board, that was not considered, I guess, according to the litmus test, not cool. So they were like, hey, we're going to take away your 501c3. Well, that we were doing almost $1 million a month in business.
Wow.
So it was crazy. And of course, me having no college, I'm like, where am I going to replace a decent income like I was making?
Absolutely.
Once the IRS was like, sorry about you, you guys got to go away. So it really, the whole family went through that was a rough deal. And I met my wife working there. So I decided to go to real estate. And what's funny, you're going to laugh, because I literally said, well, I'm going either mortgage or real estate. And I want to go mortgage. And my whole family was like, no, you'll be a better realtor. And so I was like, well, no, I think mortgage guys have it easier. I don't know.
So that's funny that you say that in regards to your beginnings into the introduction of this industry. I myself opened a credit repair company when I was 18 years old. Had just gotten back from playing college football. Didn't know much about finance and all that jazz. So I was working at the bank inside of Walmart, and essentially a buddy of mine had moved back from Arizona, and he was like, I've got this new thing and I think we can do it. It's called credit repair. We were like, okay. Yeah. So we started helping people fix their credit. And as you know, the number one reason why people even want to fix their credit, it's not to go get another credit card or another car, it's to buy a house. And similar crossroads I had was going down the route of being a realtor or a lender. And I went and took all the real estate tests or real estate classes, got to the end and went, this isn't for me. After working in a bank for many years, it was like, I think I can help people on the financing side a little bit more than I can on the real estate side. And no matter what, I can always go the other direction if it doesn't work out. So yeah, here I am, right?
Smart play. I mean, and you like your weekends too, right? No, I mean, I know you guys work your tails off too, but you're right. It is a different, it's funny how that just divided my direction where I went.
Right.
But when we say credit repair, so actually, that was more of a for-profit side that my uncle ran on his own. We were doing the DMPs, the debt management plans, where people come to us just crap loads and shitloads in debt, right? And they were like, hey, this is all these unsecured credit cards.
Right.
I can't make my payments, blah, blah, they're at 25% interest rate, right? And we would get them under a plan where we consolidate them into one payment. And then we'd basically negotiate to get them down to like 0%
Sure.
or like 10%. And then for us doing that, it was a genius real business model my uncle had found. The credit card companies were paying my uncle basically what's called revenue share
Okay.
on the money we were paying back.
Which makes sense. It's almost like the same concept that I tell people all the time. Trust me, the bank doesn't want to foreclose on your property. They're not in the business of hoarding a bunch of properties. They're
Yep.
in the business of collecting interest off of your payment so that you can live your life in your home, build your equity, et cetera. Now, it's funny that you mentioned the debt consolidation piece because I feel as though there's a lot of that is necessary in today's world. We're seeing the credit card debt at the highest it's ever been.
Yep.
I, on the lending side, am seeing every other credit report that I pull heavy with credit card debt. And I don't know if it's a matter of they thought things were going to get better sooner, or they had situations occur that could not recover from, so they're relying on those credit cards, or it's just wasteful spending. I mean, all the above could be the fact. Yeah, absolutely. So as you progressed, and I will say as you transitioned into real estate, what was that like?
Yeah, you go home every day and you're like, okay, I didn't make any money today. My wife and my kids are looking at me like, are you going to bring money home or are you just going out to happy hours with your title people, right? And that's back in the day when title companies could actually do some stuff,
Oh, yeah.
right? Because I've been in it 20 years. And so I started, I was like, man, these title companies were no joke, dude. They were
Correct.
Spurs games. And I mean, it was like, dude, I'm a rock star and I haven't even sold one property yet.
So true.
But it was one of those where I knew I had to buckle down, and thank God I had enough savings in line where it was like 7-8 months of savings where I needed it.
Yeah.
And my wife at least was working at a doctor's office as a secretary or whatever. So it supplemented a little bit because we both had worked at that company.
I see.
So we both lost our incomes, right?
Yeah.
So it was a lot of like humble pie kind of thing, because coming from a guy who was an entrepreneur, I had a landscaping company for a while and I sold that and made money, right? And everything I worked so hard, when I touch it, I was like, oh, well, I'm making money and this is cool. I'm not really going after the money, but this is good, right?
Sure.
So when real estate started, I'll never forget, I met David Jones and Craig Owen at KW, and I thought, man, these guys are a joke.
Yeah.
Like, I don't need any of this. Like, they're like, oh, you need to go through Camp 443 and all this training. I'm like, man, I ran a business with my family. I know what I'm doing, right? 6 months later, after being at another company that has their names on the doors, when you got to get out, I realized, oh, wow, it's not as easy as it sounds. So I came back as like the prodigal son and asked David Jones, like, please take me back in.
Yeah.
So, yeah.
And okay, going through that transition with not necessarily failing at the first brokerage, but let's call it lack of leadership, lack of mentorship. Because for sure you had inspiration and drive. I mean, shit, money was the motivator. You needed to make some.
Yeah, it's nice. It's
Right?
nice to have it. Yeah.
What was seeing the other side of the fence looking like for you?
You mean as far as the mortgage side of the fence?
No. So you worked in mortgage?
Well, so no, and I thought you were getting into the transition to the short sell side because I was
not
like,
yet, not yet.
okay, got it. Okay.
But wait, there's
Got
more.
it. Yep. I was like, I opened that curtain. So yeah. In the real estate side, it was definitely who you knew. It was a contact sport.
Yeah.
And my claim to fame was open houses. We had the database we had from the debt management plan at the time, or the credit counseling company we had. My cousin got into real estate the same time. He was the CEO. It was his family. I'm an outcast. I'm from Indiana. So every single person I knew in San Antonio was through them. And guess who got all the business?
He did.
He did.
Yeah.
And I love him to death. Him and I are brothers. Well, he crushed it, got rookie of the year. Of course, all those people went to him. And so I had to literally start from nothing. And then after 2 years, though, his business dried up because he's like, hey, I'm not getting people referring
All
to me
my
anymore.
sphere is sold.
And he was like, peace, I'm out. And then that's when I
Wow.
started like hustling. And I give Craig a bunch of shit on this because he told me the day, like, man, your cousin, he's going to make it.
Yeah.
But I don't know about you. And that's when he first told me, I go, okay, 20 years later, do you still think that? Yeah. So yeah, no, he did.
And it's I guess, I don't know, odd that there's a lot of agents out there. You don't even have to look for it. You jump on social media, you're seeing it, that are still knocking the concept of open houses. And the reason why you were doing that is so that you could meet people you had never met before. And I have a saying that says, if we only did business with people that we know, we'd all be broke.
Right. Yeah, right.
It's true. So would you advocate for things like that still to this day?
Oh, and that's a good one, Mark. So my company name, Expose Homes, and I tell sellers, hey, I'm pulling back the curtain. I'm exposing you what the real estate business does, right?
Absolutely.
Knowing,
and while you're saying that, JC, go ahead and throw up a reference. Let's make sure that everybody knows where to go. Exposedhomes.com, everybody. This is Josh Boggs' website. You can go there to discover all the things that real estate has to expose to you. Go for it.
Wow, that's a heck of an intro. I need to round more.
Well, you'll be able to grab that clip.
I love JC doing all that, by the way. It's awesome.
Yeah.
Thank you for that. So, getting into that now, when I just actually went up into a listing agreement or listing consultation where I was going against 4 other agents, and they were really good agents. The reason they chose me, and they told me that after the fact, is that, dude, you're brutally honest. Like, you just get to the point and you don't bullshit us.
That's right.
And because one of the questions the wife had on ChatGPT, well, will you do open houses and how many will you do? And I said, I'm going to do none. Because if you want an agent to use your house to amplify their business, cool, go for it. But I'm not the guy. But if you want to get it sold, I'm the guy.
That's outstanding that you say that, because it rings true to a age-old philosophy of when you're doing, or when you set out to do an open house, don't expect to sell that property. That is not even the MO of doing an open house. You do an open house to generate new business, to build new relationships, to work on your mouthpiece, essentially, because you're face-to-face with a customer right then and there. But the idea of selling an open house, I think it's happened maybe twice in my entire career, and I'm a huge advocate for them, because realtors need to know how to do them the right way.
Right.
And you having said that and being honest with your customer, that speaks volumes, truly.
Well, Mark, here's the other thing too. And I tell them, like, hey, this is the same thing that you guys haven't asked me yet, but I'm going to tell you, I'm not showing your house to buyers. It's not me personally, right? Because I represent you. I know what, I mean, we're going to hit hard in this presentation of what your bottom line net could be, what you're comfortable with, how I negotiate.
Sure.
So if I know all your cards, how do you know that agent hasn't divulged any of that to a buyer's agent, or the buyer, if they don't have an agent, and say, hey, you guys figure it out, and I'm just going to collect both sides of commission. And then somehow it got down to the number you guys would say, that's my bare bottom dollar.
Weird.
Right? Isn't that weird?
Absolutely.
And so I know a lot of other agents out there might hate my guts for saying that, because they're like, oh, that's the way you sell and that's my job. Well, maybe in the luxury market, it's a little bit different, right? Because I think luxury buyers at that point, they already know what they're doing, right? And it's easier. But I'm just real passionate about letting them know that, guys, I'm in your court just like you would want an attorney or anything like that. And yes, I know we're not attorneys, right? But I really am going to do everything I can to fight for you in your best interest. And when I tell you this is what I'm going to get you, I'm going for it, and hopefully more.
Well, man, it's like refreshing hearing that right there in itself, because and I'll give you an example. You've got a lot of buyer's agent, and I'm not speaking about all of you buyer agents out there, but we've seen it recently to where, let's say a property doesn't appraise, and I've got the buyer's agent fighting for that property to go up in value. When the first question I ask is, hey, show me the comps, guys. Show me the comps. If they're not there, why don't you fight for your buyer, for our buyer in this situation, so that they can get what they see now at this point, a deal on the home?
Absolutely. Well, that's the scary part too. But you know that, and you said it in another podcast you had a couple amazing other agents on there too. Basically, at the end of the day, most of these agents haven't gone through a shift in the market yet, so they don't have these skills, and they haven't really been trained right. And I know JJ's loving it, right? He kept saying, it's like, I'm Robert Horry, now I'm in the playoffs. So I love JJ, right? Yeah. So he's got the right, because most agents were just like, well, I was given a problem. I don't know what to do with it. So here, you guys figure it out.
That's right.
Right. And as a listing agent, I always have my comps. So I'm okay with it if they come in, hey, Josh, came in a little low. And I'm like, awesome. I've got all my comps. I've got my information. I'll go back to the appraisal. Let me work on it. And like, oh, okay. But they let me do it. And then I get my clients the value that I've got.
Absolutely.
And I've had to tell them that at the very beginning when I'm looking down the sellers, like, guys, it just doesn't mean it's all, sweet roses when I put it out there and bring in a buyer. I still got to fight with the appraiser as well. Right. So if that appraiser, whatever, has a burr up his ass and he finds comps that don't create the exact same data that I'm looking at, And I tell them like, look, I'm not an appraiser, but I've got the experience and the education of almost appraiser would, just
That's
don't have
right.
a license.
That's exactly right. And I think more realtors should focus on just the simple concept of learning how to read an appraisal so that they are equipped to be able to handle that situation. You wouldn't be surprised. We'll have how to read an appraisals class. We'll have 2 agents show up. It's like, okay, guess you guys don't really care about
Right.
this. When in actuality, that's part of your fiduciary responsibility is to know what that is. Don't call yourself an expert. Don't call yourself even a professional if you don't know how to do the basics of what it takes to do your job.
Yep. No, and Mark, I think that's the one thing about real estate. Like I tell everybody, I don't tell people I'm a realtor. When they ask me, hey, what do you do? I'm like, the last thing I say is, I'm a realtor. I actually say I own a real estate company in San Antonio and I'm a consultant. And the reason I say that is because I've noticed, and there's no knock to the agents that are out there. There's beautiful agents out there that are really good at just putting themselves out there and putting a house out there, and they'll get clients because they're a connector, they're a networker,
Sure.
and they're doing their job. That's a lead gen, activity. That's what they should be doing.
Sure.
But as far as the knowledge behind it and the know-how on how the intricacies of those deals go, it's like talking to a paper wall. Like they had no idea. What are you talking about, right? So I think that's the challenge I think I've seen for myself is I'm not the greatest at getting myself out there and networking and doing a lot more of it, because a lot of the deals that get passed my way are the deals where other agents had them and couldn't get it done.
Yeah.
And I said, well, I'm like a firefighter. I'm jumping in there when everybody else is running out because I will figure it out.
That's right.
And I that's the dichotomy about real estate is guys like me sometimes aren't always at the head of the line, at the top of the line when it's the Facebook groups.
Correct.
People looking for referrals because I'm not out there all the time networking with all the agents. I'm actually getting the deals done.
I'm doing my job.
Yeah.
Makes
Isn't that
perfect
crazy
sense.
though?
Weird.
Because I know our job as agents is to lead gen,
Sure.
but where does, I mean, maybe I'm old school, where does the job of actually getting the deal done right go into that too?
No, that's a great point. And I think that our industry needs more of that philosophy back into it because it was there. But as real estate became a glamour sport, so to speak, I don't know. We were flooded with a lot of folks that just saw the paycheck and not the trade and the craft for what it is. And that to me it's a bummer, but at the same time, I'm also optimistic about it because as you see figures of people falling out of the industry that can't keep up with the hard market or the tough market. I don't know if it's a tough market, hard market, what have you, but it is a market. And as an expert, you should be able to navigate through the good times, the bad times, because at the end of the day, there are still folks that need to sell and still folks that need to buy. Simply put.
Simply put. And you're right. And, I don't want to go on the side where now I'm like the Jerry Maguire of real estate and write the manuscript and everyone's like, oh, Jerry, you're out of here. But I always felt like that was a little bit of my place because I did notice there's, again, a lot of hypocrisy up front, a lot of things that realtors are putting out there. And the one thing that kicks me is that, you can throw a stone and hit 3 realtors in San Antonio.
Absolutely.
So most of us know a lot of the same people.
Yeah.
And I'd be in front of somebody that would make a comment like, oh my gosh, so-and-so is killing it. Man, they're always posting on Facebook. And I'm like, dude, they're posting other people's listings. They just go to do it.
That's right.
But I'm not going to rain on their parade, but in their perception, because they're out there on Facebook, always posting it, which is another good point why a lot of realtors should be on Facebook a lot more. Then they're not getting the real story behind the deal. So,
well, I mean, there's an old philosophy that I believe in, but it's not the way that it's being portrayed right now, which is fake it till you make it. I'm not saying fake it by posting somebody else's listings and all of that. It's walk the walk, talk the talk, and be honest. If you don't know the answer, find out from somebody or let them know you don't know the answer, and you will get back to them as soon as you do. Be the trusted resource, so to speak.
Well, and you're right. And don't get me wrong. We all had to start somewhere and you had to fake it till you make it, right? And that was the question people would ask when I got started. I was, 25 at the time. How old are you? And I'm like, I tell you what, at the end of this transaction, if I haven't wowed your socks off, then I'll tell you my age, right? And most of the time, they just forgot about it. They're like, dude, you're awesome, man. And so, because I didn't want to tell them, how many deals have you done? Well, I'll tell you what, after, so you do have to do that. And I'm not knocking that at all. What I've just noticed is now, especially with social media, has been so prevalent as it is.
True.
everybody sees so many things on the surface and they get that gut reaction, and it's not always the same thing behind the scenes. That's all.
That's so true. And that is essentially why we have this podcast, to be basically pull back the curtain on a lot of different topics. So we've got a couple of things to talk about here. And you tell me if you want to go down the road of the philanthropy that you're doing and then come back to the short sale and pre-foreclosure stuff, or we talk about that and then we end with that.
Dude, let's go to philanthropy. I love that. That's a big key of everything. I'm a Christian. I believe so much in what the Bible says is you give unto others and it should be given unto you, right?
Absolutely.
And it comes back sevenfold. And that's one thing my uncle has told me. And I've always, like Steve Collins, guys that have been influential in my life of telling me like, hey, tithe even when you think you don't have enough.
Correct.
Or you don't, and just give God the trust. And part of that became I wanted to give back, and I ended up having a motorcycle at the time. Watched Sons of Anarchy, and my wife was like, "What are you watching?" I was like, "Oh yeah." And then next thing I know, she's like, "You're really going to do this?" I'm like, "I'm going to do this." And I went full in and found a nonprofit called Guardians of the Children.
Okay.
And when I heard their mission about helping abused and neglected kids and basically standing up for these kids when they have to go to court, because nobody in the room can be related to them if they're going against their abuser, they need some tough, rough bikers to stand there and give them that power and that effect that they need to say what happened. Right?
Wow, what a concept.
Dude, it was awesome. And I tell you what, that changed my world, because being a biker in that organization, they're actually now the largest nonprofit that deals with abused, neglected kids in the country. I ended up becoming the president of the mother chapter in San Antonio. Wow. So it started here, which was awesome. 19 years ago, by the way. Just a couple weeks ago.
And when did you become associated with that?
2000, I want to say 2012.
Okay.
Yeah.
Because I think it was probably 2018 or so when you came and gave a presentation. And I was like, holy shit, I knew nothing about him on that. Whoa.
I think I remember that presentation.
I'm sitting there like, really? Okay. This is awesome.
Yeah. And I loved it. You know what? It was just amazing watching these guys. And most bikers get bad names, right? They're meant to look scary. That's what they love. They're really not taking care of themselves the way they should, but they're the biggest hearts that and in fact, of all the motorcycle industry here in San Antonio, I got to be very connected with that. Just everybody stood up and really backed what we did. And I love that mission. But in 2020, it was time for me to head out because my vice president was pretty much wanting to take over the reins. And I'd already had my big old firework accident in 2018. And so a lot of people were like, hey, maybe you just take a little time off, right?
Yeah.
So that's what happened. And then I ended up becoming licensed as a CASA advocate right at that point too.
So was it, what did the firework accident, let's pause there for a moment, because there's a lot of folks out there that saw some of this stuff on social media, but was that something that pushed you to dig deeper in all of the philanthropy that you're doing and give back even more so than you already were at that time? What changed in your life? And if you don't mind, tell us what happened.
Yeah. So, I mean, as far as making me want to dig deeper, I think really what it did is, number one, it just brought back into the fact that God does exist. The fact I'm still sitting here talking to you and in the room with JC as well is a miracle. There was no way that firework accident. In fact, there was somebody that had almost the same thing happen to them. Like a week later, of course, we're all idiots that like to play fireworks, and they died instantly. Wow. My head was broken in 3 different parts in the forehead, the hardest part of the head. I had a brain aneurysm. I was in ICU for 2 weeks. I had half my hand hanging off, and they said I'd never be able to use my left thumb again. Well, I'm moving it. And so what it really did is, we grew Guardians of Children so big, because when I took over, there's only like 8 or 9 members. Okay. There was maybe 13 kids. There was like 14 grand in the bank account. By the time I left in 2020, there was over 114,000 in the bank account. We had over 103 kids. Wow. And we had almost 60 members. Wow. So I was stressed because it's hard to do that and run a real estate business. Sure. And the other thing was too, it's sort of, it put me on the edge of a lot of my clients that weren't really comfortable with bikers. And so even though the mission was great, they're, man, you have a great mission. They were like, if you're a biker, you're hanging out with people we're not comfortable with, right? So it was a little bit hard for me to like really ramp my business up and take care of myself and my family more. Yeah. And I think that's what really changed it, honestly, Mark.
Wow. And a lot of folks out there take things like that for granted, truly. And that's a testament to that.
Yeah.
So in going through this philanthropy that you do, I mean, is that something that you're able to get your family involved in, you're able to get your community involved in, you're able to spread that to the other agents that you mentor? Even from a distance, you may not know it, you're mentoring agents out there from what they see, hear, et cetera.
Yeah, and I'm so blessed to be part of that. It's one of those things where I'm not trying to put myself out there, but I also do hope that if people say, "Hey, you know what, Josh, I want my life to be better. I'm not looking to do 10 more million this year, and that's only my goal. I really want to have a more fulfilling purpose on this planet." And that was what I want to get at. And yes, in Guardians of Children, my wife was the secretary. I was the president. My kids were little guardians, so they were all part of it. But they all got to ride with us and everything. And then when I got out, I was a cost advocate. That's the one thing to change a little bit, because there's a lot more rules in that, because I am dealing with kids in the foster care system and the state care, where there's a lot of Privacy Acts and HEPA and all that stuff. So my family really couldn't get to know a lot of that stuff, but I was helping some kids that were basically needing some turnovers in their life and some like role models, right?
Yeah, absolutely.
And then the last thing was I learned about, I knew for years, this amazing lady named Pamela Allen. She ran a nonprofit called Eagles Flight Ministries.
Okay.
And one day I'd been giving money to them, and because that was one of my missions. I was like, man, you guys are doing God's work too in San Antonio. And she was like, hey, we'd love you to be on the board of directors. So that just happened, 3-4 months ago.
Wow.
And it was just awesome. I was already on the news for one of their deals with that baby Mary that was unfortunately given birth, and the mom threw her down the toilet. And we've seen a lot of stuff, right?
I can only imagine. Wow.
It just, what it has done for me is obviously the network and the connections. I've got amazing friends in this city that are of high officials, public officials, things because of the nonprofit,
Right.
that it wasn't my intentions to get, but because of just wanting to help, it sort of was a byproduct.
Right.
And so it's just been really cool. Maybe it hasn't maybe this gigantic real estate company where everybody knows my name yet, but it's just more like I'm okay just being known for giving back and helping the kids and the community to do whatever needs to be done to get a better help to them. So,
Well, I'm a big advocate for everything happens for a reason, in addition to you are exactly where you are supposed to be in life based on the decisions that you've made, et cetera, et cetera. And that's something that I believe speaks volumes, not only to your success, but also to what it can do or lead to with success, working your ass off to get the goals accomplished, et cetera, and then leveraging that over to giving back and doing something that is bigger than yourself. It's huge.
Trying to become a homeowner is so frustrating. I mean, I wish it were easy to find out what options or things I may qualify for.
There actually is an easier way. I'd love to tell you about it.
Oh, there is. Hold on, let me call you back. Okay, I'm interested. What's the catch?
There's no catch. If you have 2 minutes, I can literally show you now. It's really easy.
Sure, let's go.
Okay. It's going to coach you line by line and have you answer some questions that'll identify the best loan products for you, starting with the property address, which is specific to the area which programs will work for you. It's going to guide you through a series of numbers, loan options, and give you everything so you can choose what works best for you.
Well, I had no idea there were so many options out there for me. It was so easy, it was so quick, and you didn't even have to run my credit.
I know, I told you in less than 2 minutes, right? Did I make it?
You did. Let's go.
All right, let's go.
yeah, and I appreciate that. And it is a challenge to time block. I was proud I made it here on time, but that has been my biggest weakness, is not showing up, because all of a sudden I'll get a call and I'll get them, I'll just get into the conversation before I know, oh crap, I got to go. So,
Right.
yeah.
And that's another thing that I love these podcast discussions is I get an hour interrupted from the phone to just have intellectual conversations. And I feel I should be paying the guests on here for free therapy, you know?
You don't have to pay me. Yeah.
I love it.
Just hang out more. Yeah.
Amen. So now let's jump back into the real estate side of things. And as we do that, JC, if you could throw this up on the screen real quick. We've got your exposed properties right here, the website. Tell us a little bit more about what that's about. Now, I know you had mentioned that you want to be the person, the group that exposes the behind the scenes of what it takes and what homes consist of and everything else behind that. But if you could, why did you start this?
Yeah. So what I like to tell everybody, and it's a complete joke, but look at the 3 letters of expose. I'm the grandfather and the original founder of EXP.
EXP.
I'm just saying, I should have gotten some money in the mail by now. This is ridiculous.
You put the X in
Right?
EXP. Yep.
It was more of a two-prong approach, right? Getting in real estate, I wanted to expose my clients' homes everywhere possible. So that was the branding, the marketing of it. Like, hey, as a listing agent, I'm going to expose your house to everywhere. That's our job, to put it out there everywhere. So I'm really going to get real hyper focused on all the marketing efforts. And so we're exposing it out there. So if you don't want your home to be seen, don't come with us.
Yeah.
That was the exposed part. The second part was really as a client base. So just, we're going to pull back the curtains and show you what's going on. So you don't have, it's more of a consultation and education along the way.
Yeah.
Because I remember my first experience with the realtor we were going to use at the time, I would ask questions and it was just like, no, I'll answer that later. And just need to do this, right? There was no really advising. It was just probably telling me to do it. And I said, well, but I understand why. Well, it doesn't matter. That's just the way it is, right? And I had a hard time with that. So I was more of a cynic and I go, you know what? I would really want to create more of a relationship base with my clients, and the exposure, you're just going to get me. It's raw. I'm not politically correct. I've failed often. I sin every day, like everybody,
That's right.
and I'll admit it. But I really do want you to know that I'm real passionate about giving you the best service possible, and you're going to have all the tools I have.
Absolutely.
So that was what it is.
I love that because so a lot of similarities I'm seeing here, and I don't say that just to for a catchphrase. Behind me, LoanBot, Review My Mortgage, same concept with mortgage. When I got into the business, it's like everybody wants to keep everything secret in regards to what they can offer their borrowers or what they should be providing to their borrowers. And I'm trying to figure out, okay, is it because you only know that program, or are you not doing the research to discover different opportunities? In many cases, early on in my career, the branch manager was against selling bond programs because obviously we don't make a lot of money on them.
Of course.
But in many cases, it's the best scenario or the best solution for that borrower scenario. So back in 2020, we launched reviewmymortgage.com, which essentially gives the borrower full transparency to what they can possibly do based on what their criteria is, without pulling credit, without talking to a lender, etc. Now, fast forward, we're now giving LoanBot, which is the customizable tool, allowing the realtor to now give that to their borrower as well.
Wow.
So it's just, we're getting ready to launch it. It's doing fantastic. And we're looking at, goodness gracious, we're already just under 200 of these that we're giving out. And the goal is to spread it nationally as wide as possible, because it truly is a tool where the realtor can give it out just like their business card. If you have an IDX, so for example, if they can search for homes on your website, you'd put your link on there on the home search, boom. Contact, they've got link to the lender. If your preferred lender, doesn't have to be me, doesn't matter. The idea is to keep them all in one place, providing them constant value, because let's face it, what do realtors have to give to their customers while they search for home, while they wait on the fence, etc.? They're going to end up on Zillow. They're going to end up on the Google machine searching for this stuff anyway. So anywho, I'm off my soapbox. Just so you guys know, if you are interested in signing up for LoanBot, visit loanbot.pro, and we are now taking orders for that. That being the case, you specialize in something that a lot of folks are absolutely terrified of even talking about. It's a true story. And so much so that it's almost used as a way to scare people from buying, scare people from owning. And on the other side of the token, another way to capture customers that are looking for this type of product. Mm-hmm. I'm talking about short sales. I'm talking about pre-foreclosures. How did you get into that?
Man, it's funny being a guest. Normally I'm on the other side because I wanted to tell you and I didn't want to jump in. I love that concept. I really do. And I tell people all the time, just for the listener knows, it's not like I'm sending you a ton of business. That's why I get on your podcast.
No,
right?
hell no.
Yeah, but I've actually tried to, and I'm still going to try to. I tell everybody, like, there's so many amazing individuals that are just crushing it in this business. I wish I had more business to hand out to everybody.
Sure.
And the one thing for me was the loyalty. And that was the one thing that I was like, okay, I've limited to one or two that I know that had the products, but I know you've had that heart, and it's good to know that you have that. So we need to talk further.
Appreciate that. Yeah.
But as far as the short sale wise, it really got into started because back in 2008, obviously we saw the crash coming. There was a guy named Bruce Hardy came to Keller Williams, and he was talking about how the nation was basically on this gigantic foreclosure wave, right? And San Antonio really hadn't seen it that much.
Right.
And I remember asking him, I was like, hey, Bruce, no offense, but we're really not seeing that here. Of course, I was only into it 3 years, so I was like still green behind the ears. And he goes, look, America is on the same train. You guys just must be further back at the caboose. But trust me, you're getting there. And then that's when I was like, you know what? My background came from financing and understanding more of the debt side.
Sure.
And I wanted to learn more. And then that's when I really walked in with 3 amazing guys that were in the KW inner circle. That's what I call them, was Kevin and Fred. They're out in Phoenix, and a guy named Nolly Williams. So Fred Weaver and Kevin Kaufman, those 3 guys were absolutely instrumental in coming around and talking about short sales, and they were in Arizona. So they were in like the hot spot, like there was ground
Absolutely.
zero. And so when I heard what they were saying and behind the scenes stuff, and they used to call it short sale power hour, there was a real thing that I connected with them, and I go, man, I get this, and it made sense. We talked about loan loss reserves and fractional lending,
Absolutely.
and all basis points, and why servicers are getting paid more than blah blah. To me, I got it and made a lot more sense. So I was like, you know what, I'm going to jump into that because I knew the market was headed that way. And instead of chasing REOs where the banks are now your customers and they're your clients, you have no database if the banks give you no business, right? I wanted to help people avoid foreclosure. So hopefully in 3 to 4 years after they've been able to rebound and get things back, boom, they're coming to me like, Josh, you saved me. You were awesome. You were instrumental in doing this. I'd love to buy a house with you.
Wow. Wow. And going through that, I guess, venture, that journey of short sales foreclosures, did you experience quite a bit of it within San Antonio's market?
Yeah, well, in 2009, I tell everybody this: I spent over $9,000 with attorneys to create documents. I spent over $20,000 in investing and coaching to understand more of the concepts behind the scene. And I almost really got out of real estate because it almost bankrupted me.
Wow.
I really had no money left. It took me 3 short sales, and it took me almost 9 months to figure them all out.
Wow.
And they were all investor owned, so they're pretty much strategically defaulting at that point.
Right.
Which again, that was things that nobody really heard of, you know. And so I finished those 3, but then it was just like, again, by the grace of God, it was like he had me hanging on by a thread. I was like, dear Lord, I hope this is the right way. And then all of a sudden, boom, out of nowhere, I got connected with other people that were coming around the country doing these. And they're like, hey, you've been doing short sales? Hey, I've got a couple. Boom, and referrals. And the next thing I know, these wave of referrals started coming in.
Yeah.
And then that's when I built up another company called US Short Sale Solutions with a partner of mine. And she was in Austin, and we found stay-at-home moms that had nothing doing, you know, soccer moms.
Yeah.
And was just say, hey, all we need to do is get on the phone with this and this and this. And we created a system, and boom, we just took off, and we were crushing it. We were doing 30, 40 a month.
Holy cow.
Yeah.
Wow. And that, number one, I think, matter of fact, summed up to where there is an issue, a problem, there's opportunity in many cases. And then this opportunity, of course, you're making money from it, but at the same time, you're also helping someone in a pretty shitty situation. More times than not, it wasn't their fault, but at the same time, short sale, it's a kind of, it's a tough pill to swallow, knowing that you just recently purchased and your home is not worth what it's worth or what you thought it was worth. That being the case, what do you see in this coming, let's call it next couple of years? Because we got, JC, if you can throw this up here real quick. We've got this first one, this article that I found. It says foreclosure rates in all of the 50 states in March of 2024. Obviously, this is old data, but this puts Texas right around, I think it was like 13 or 14. 14. The Lone Star State withstood 2885 foreclosures this month, with foreclosure rates 1 out of every 4,040 households. This puts the second most populous state in the U.S. with a whopping 11,654 housing units, 14th place. So essentially, we're not first, we're not last. And if you're not first, you're last. No.
Right. Ricky Bobby.
Yes,
Bobby.
that's right.
Yeah.
But then I found this other article where it shows foreclosures are drying up, and it's all showing in sales data. And essentially what this article summed up is saying is that, and you can pull it away, is that there's not the amount of foreclosures that everybody expected there to be this time within our market, our industry, based on what has taken place. And my only explanation for that is the banks are giving tons of opportunities to the homeowners to keep their home, such as forbearance. They're allowing their extended forbearance to go. But at the same time, the only thing that I do fear is this concept of new construction homes that are being priced by the builder and essentially purchased with all these incentives, keeping the prices high. And we're already witnessing it a little bit, time to sell, or I have got to move, or I'm PCSing, or what have you. And their home's not worth the amount that the next door property is being sold for.
Yep, Mark, get ready. I'm going to put the tinfoil hat on. Let's do this.
I love it.
So when you
Where's
see
Elon Musk?
Yeah, I know, right? I'll just give him a
Podcast
call.
just went up.
Right. I think Doge just sent me out of here. No,
That's awesome.
So no, the issue that I'm seeing and like headlines like this are to me just clickbait.
Yeah.
So banks, and when I say banks, the servicers, the mortgage servicers are basically being told to keep kicking the can on the road and have a controlled supply of these foreclosures. I'm seeing this. Here's why. So guess what? When COVID hit, what got passed? CARES Act, right?
Yep.
COVID, I forget what the acronym stands for, right? But what was going on at the time, and of course we all know as soon as COVID hit in 2021, our market just spiked, went crazy. But when COVID hit, we had so many homeowners that were actually current with their mortgages, and they could probably made by, but they got the advertisements in the mail and said, hey, U.S. government has passed these programs. We're allowing you to skip a couple payments if you want. And I'm seeing so many clients like this right now, especially military.
Yep.
They'd send in their application and say, great, you can start skipping payments. What they weren't told, it was a forbearance setup.
Correct.
So 3-4 months later, they're like, cool, okay, now you need to start making your payments again. And by the way, you can't make your regular payment. You have to make the 4 months you've missed right now.
That's right.
Otherwise, you're going to be in default.
Or
right?
we're going to throw it on as a second lien on your property, or, and we're going to tack all this stuff. We experienced that like right after it ended. We had a lot of folks that were trying to refinance into these lower rates. It's like, hey guys, you just came out of forbearance. So, well, that means you can't make your payment.
Yeah. What?
That's literally what that means. Whether it was done out of a necessity or taking advantage of what was there opportunity-wise. Either way, I don't think that they explained it the right way to them. It just came as a way to go, you know what? I can pause my mortgage payments and go spend money over here.
100%. Well, and not only that, and going into that, so you got to remember the setup. It's what we call the home retention waterfall and then the loss mitigation waterfall. So first, of course, offer the forbearance, right? Well, who in their right mind really can take advantage of that? There's not a lot of people that say, you know what, give me 3 payments to skip.
Right.
And by the 4th month, I'll be available to pay the 4th month and all those 3 back.
Correct.
It doesn't really happen,
make sense
right?
either.
We're at our lowest savings ever in the U.S. country, right, by the way. So in that retrospect, then like you said, the partial claims is what they come. It was an FHA loan. They just did a deferment, right?
Yep.
Let's throw it on the back end. Now they're even looking to do a 40-year amortization. You've probably seen that.
Absolutely.
And so they're doing all these things just to keep pushing the problems back, so that way they don't have so much supply on the market and the REO inventory doesn't shoot up, right? But we are seeing it happen because we're seeing so many banks just kept kicking the can down the road. And now, of course, we have a change in leadership. A lot more things are going on. I'm seeing people that have come to us 10, 12, 14 months delinquent.
Wow.
And then they're like, well, I guess I'm going to face foreclosure. And I heard about a short sale. So we have so many new agents, though, that don't know what short sales are. And the buyer's agents are clueless. So when I have some of these, more descriptive documents about, hey, what a short sale is, blah, 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 it's scaring them off.
Sure.
And then they're like, well, then I don't even know what that is. So I'm going to go somewhere else. Right. And we already seen that they have the option now because their inventory keeps going up. Realtor.com has, if you look at their reports in Bexar County for every single month last year, we had almost 2 to 3% median listing price depreciation.
Yeah.
So we started seeing values drop, inventory go up. And obviously we're not San Antonio is a huge market. So we have these smaller markets throughout.
Correct.
These micro markets. And there are markets where I've seen 11, 12, 13 months of inventory
Right.
where there's a lot of new builds.
Absolutely.
And people that bought 2 years ago, all of a sudden, I mean, I kid you not, I'm seeing so many homeowners that hadn't even made their first payment.
Wow.
And you know how that goes as an
Absolutely.
originator. Boy, that's one thing you don't want to see.
No,
Because you're
never.
coming back, you're either buying it back or you're losing all your
That's
commission.
right.
And so, yeah, we're seeing more of it on our side. I know I've been asked to go speak or do our short sale class in Corpus and now in Houston. And we used to do that back in the day.
Yeah.
I was real hesitant to do it for the longest time because I sort of was hoping, like, I also want to be one of those optimists too.
Sure.
Hey, interest rates might finally, everybody's getting used to it, and then the market's going to start picking up. But we started seeing so many realtors that were overpricing their properties and just chasing the market
That's
with
right.
everybody's else inventory going up. Then they finally got to a breaking point. They're like, oh, well, now my client just told me they haven't even made payments for 4 months.
Wow.
Guess what? They're coming my way.
That's right.
So that's
That
what's
makes
going on.
perfect sense. Wow. And the idea of being that behind on your mortgage and it being allowed, that should be almost the part that we hone in on. But unfortunately, there's nothing we can do about it. If the bank's going to allow you to do that, because let's face it, they're not in the business of owning all these properties. They're in the business of taking the interest while you pay it off, et cetera.
Yep.
It can turn into something just like you're saying, that out of sight, out of mind until it snaps.
Yep.
And we could be approaching that breaking point, truly.
Well, I mean, nobody really knows this, or maybe they didn't, or maybe they did, but I was blown away when these servicers actually get paid more basis points on the servicing, even though the monthly payment's not being paid, because it's supplemented by the government, because it's now more servicing requirements
That's
to
right.
get
In order to
notices
pay
out
those
there.
coupons. That's right.
So is there any benefit for them to get it off their books that quick?
Good
right?
point.
A lot of them aren't the investors. They don't, it's not their money that's been lent
Correct.
out. They're just the servicers.
That's right.
So if they're getting paid, I mean, again, we all knew that story when Bank of America had their biggest quarter ever when foreclosure threw the tank. I mean, we're like, how is that possible? Nobody's making
Right.
payments. Well, the government was spending that, right?
Subsidizing. That's right.
And we're seeing all that now with everything else going on. I really think that this is going to shake up a lot, even the mortgage. Hell, the CFPB being shut down now.
Yep.
Right. And I know personally, I've seen CFPB complaints. I've filed them. I've
Right.
helped with homeowners. And they're literally a joke when you get them back. Like there's blatant misrepresentations and servicing issues going on. And they come back like, well, we investigated and they said everything's good. You just need to submit your documents on time. Give me a
Weird.
break.
Right.
Yeah.
And it's funny that you do say that, because a lot of folks are cheering on the idea of not having the CFPB. I'm kind of in between. I want people to do shit the right way.
Yeah.
But at the same time, I know that there really ain't doing shit behind the scenes to fix it. It's just this bureaucracy that we have to adhere to, that they get to decide your fate one way or another. And it has a lot to do with money.
Yeah.
Let's be honest.
It's all capital system, right?
That's right.
And you're right, Mark. I'm in the same boat you are. I'm not, I tell everybody, I'm not polarized. I'm not just one way or the other. I see both sides of the coin. And maybe that's probably the hardest part, right?
Sure.
Is because I do have a lot of empathy when I'm looking from the other side.
Same. Yeah.
And I'm really trying to understand it from both sides. So yeah, when CFPB was obviously started in 2012, I think, by Obama, it was a great idea. And they came through and they really hit some really great home runs,
Sure.
grand slams on some of the stuff they did. And we leaned on them at times for our short sales, because we were told over and over again, no, we're going to foreclose. We're going to foreclose. I'm like, you guys have no idea what you're about to lose. You have no valuation. You have no hands on the property. I'm
Sure.
ground. Yeah, anyway, so it was, it's a tough deal going on right now.
So question for you in regards to the short sale concept. First, define short sale. And then after the definition of it, I've got a question for you. Define it first.
Yep, similarly, just selling a house for less than what's owed
Okay.
to net the bank.
So if the idea of the folks that have purchased, let's say, I don't know, 5 years prior, chances are they have some equity in that property.
Mhm.
So if someone's coming to you saying, hey, we need to do a short sale, and truly not understanding what a short sale is, let's say they're behind on their payments and they research online and short sale pops up, they don't understand it fully. They come to you and say, hey, we need to do a short sale. You do your CMA and you go, I don't think you do.
Yep.
what does that process look like?
I'm so glad you said that, because that's what I tell everybody. And this is where it's hardest for me, because most of my referrals for short sales are amazing agents that have referred me a lot of it, and they're agents, right? So you certainly aren't going to say, oh, well, they didn't know what they're doing, right? But no, it's just, we understand a lot of the red tape, how to cut through it, how to get around it, the escalation issues that servicers. We understand talking with the attorneys. We have an attorney with us that we hire out sometimes, and we have to get some movement going. So what I tell them is, guys, I'm going to look at every option for you, and I'm going to see what other options are available without going to short sale.
Yeah.
Because if there is equity, and we've got one girl right now, she was told by her agent, there's absolutely no way there's equity. I looked at it, and the reason she said it is she just didn't understand that the bank put a valuation on their property and said, here, you need to short sell your property for this, even though the number one, the valuation was completely wrong. But number two is she didn't even owe that much. So when the agent saw the letter from this large national servicer, I think it was like Freedom Mortgage or whatever, they were like, oh, okay, well, it's saying short sale, so we need to go, right? And then that's when I looked back at it further. I got payoffs, obviously ran through title, and started looking through this and go, you know what? You are in foreclosure status, because they were coming up. I said, let me pull it, and I will get it pulled typically without a TRO.
Right.
And let them know we're on top of it. And we have a pretty good resume, over 619 of these done. A bank and even an attorney usually will look at that resume and go, okay, you clearly know what you're doing in this space. We're going to give you another 30 to 60 days to get it done. And if we can see that valuation, we'll get them sold in that time, and there's equity there. Oh my gosh, we'll do that. And I've cut cost on our commissions as well, just to do whatever you got to do the right. And we've even put money towards repairs on some of these. I know the last one I did in December, a poor girl, we spent almost 12 grand fixing her house up. But I knew that there was enough equity that if we stopped foreclosure, got her back, I told her she was going to get 5 grand, and she was okay with it, because she was like, well, I guess
Versus
nothing.
Yep.
We ended up netting her almost at that one. It was like $18,000.
That's awesome.
So she was like blown away, and she wrote us a Google review, right?
That's awesome.
And it just that was a God thing. But yes, that's what we do. So we give them all the options.
Wow. JC, how are we doing on time?
101.
Okay. Look at that. Just like that.
I know, you know it. It's like, dang,
I'm
you're
not
on
looking at any kind of clock or nothing.
Tell me you're
Just
professional.
oddly.
You know this.
Oh man. So, Josh, this has been a great discussion. We've gone down plenty of different rabbit holes within this concept of short sales, foreclosures. Do you know how long does it take to be considered in pre-foreclosure or foreclosure?
Yeah, I can tell you right now. So the definition is typically you're in default status after 120 days.
120 days.
So 120 days of missed payments, you're in default status. That's when they usually will put acceleration notice, and then give you your 30 days to basically dispute that debt and the back debt that you owe. And if you don't respond within 30 days with a written request, then they can start moving you into. And Texas is the fastest foreclosure sale date in the country, by the way, which is 21 days. So once that 120 days pass, I mean, they can smack you with a 21-day notice of sale date. And it's going to happen that first Tuesday of the very next month.
Wow.
Yeah, it happens quick. And that was what's hard with our short sales.
Yeah.
Because most, we're non-judicial foreclosure in Texas. So like states like Florida are judicial. So it could take them 18, 24 months to get through the court system to even get foreclosed on. So these banks are begging for a short sale.
That's right.
Whereas in our market, most of the banks are like, I don't even need it, because I'll foreclose, I'll pay a trustee, $1,700 to just file it. Substitute trustee, boom, they're out, and then they're on the on the courthouse steps that first Tuesday of the month, and it's gone.
Yeah.
Right. So we would have to really get creative and really be like a pain in the butt to these people, saying, no, if you do this, you're going to lose this. We understand this. You don't understand that there's a roof leak. There's this, right? That kind of stuff.
So 2 things I wanted to kind of give our listeners. The first thing is, even though there is the opportunity to execute a short sale or pre-foreclosure sale, just know that it will take you some time in order to qualify for a new property again after that, depending on the loan program that you go to apply for. Some is 4 years, some is 2 years, unless there's an extenuating circumstance, such as somebody lost their job, death in the family of a breadwinner, etc. Matter of fact, I just had an extenuating circumstance that we got approved.
Oh, wow.
The gentleman that I was working with, very young, had an incident where he got shot. It was and when he sent it to me, I was like, I think this will work. I mean, you had to go away for a little while and get your stuff right. He got shot in the head.
Wow.
It was
Oh, wow.
hats off to the
Talk about
kid
a
because
miracle.
he absolutely, the guy has fully recovered and is working at a bank and is doing well for himself, saved his money, 700 credit score, the whole 9 yards. Super impressed, but I just wanted the listeners to know that,
It can happen.
if there is a way to avoid having to do that. Number one, pay your bills on time. We know that, but there's many situations where you can't do that. You want to do what you can to avoid that if your goal is to own property again. Obviously, sell it before it gets to that point. Don't consider hanging on and thinking that things are going to change if nothing that you're doing changes. The second thing is kind of a question for you. The way that our market is propped up currently, if there were to be a sudden rise in short sales, foreclosures, et cetera, I believe, and I don't know this to be true, but I believe the optimistic side of me says that there are plenty of investors out there that will come in and scoop these properties up faster than they ever did before, thus not necessarily tanking the market, just more so softening the blow, so to speak. What are your thoughts on that?
That's a good topic, boy. I don't even know if we have enough time because you know, I keep reading articles that talk about the one way to get our U.S. housing back is get out of all the hedge funds that are buying all these properties, right?
Yeah.
Like, hey, because the prices kept going up and up,
Sure.
get them out of the market, and then now we can actually buy single family homes again. But you're already saying something that we all know, and it happened back in 09.
That's right.
Is the investors were the ones that came in and basically saved the
Saved the
economy.
day. That's
They had to
right.
save. So yeah, I think as long as you can show that you're getting below levels where you're cash flowing again, and I think that's the hardest part for any of us as an investor. I know you're an investor.
Absolutely.
It's hard with the interest rates.
Yeah.
When you're looking at these deals, well, I'm not even cash flow. I'm breaking even. That's not a safe bet, right? And there's just a lot of people that gambled and you know, just rolled the dice on appreciation being the ticket. And yeah, and if they were in Austin, they did really well, you know. But San Antonio, we never really had that gigantic of appreciation. I know we did.
Correct.
It was pretty decent, but
We all did.
we did. Yeah, we did. But I would say yes. In my belief as well, and nobody has that crystal ball and that direct line to God. That yes, if the short sales and foreclosures do come back, then it's going to be the investors that are finally going to be able to get there. And that's what I've been talking with these servicers now.
Sure.
Because they're still fighting me and they wanted to foreclose. We lost one to foreclosure in February just because they were like, well, we think the market's going up by 10%. I go, where's your data?
Right. And
And they couldn't give it to me. And it was it's a high level servicer. And it was an executive there. And they go, well, our national data says this. I go, well, your national data ain't San Antonio, right?
yeah, that's true. Real estate is local, everybody. It's always going to be local to your market. And I can't stand when people paint a picture with a broad brush.
Mm-hmm.
Yeah.
Yeah.
One last thing that you mentioned, because I want to look it up, and I hear a lot of grumblings about these institutions and hedge funds that are purchasing homes from families, et cetera, when in fact, it's really the mom and pops that are buying the majority of the properties. And it may not be all over the United States, but I know in San Antonio, mom and pop investors make up a majority of the investor market versus the BlackRocks, et cetera, that you see. Now, BlackRock will come in and buy a whole damn neighborhood.
Sure. Oh, yeah.
They will. But the majority of homes in San Antonio that are investment property, rental properties, VRBOs, short-term rentals, et cetera, vacation rentals, are owned by your everyday mom and pop homeowner that went, you know what? I've built up enough equity. I've built up enough savings. I want to go to my lender and find out what it takes to qualify to become an investor. And then they did it over and over and over. And now they've got a portfolio, just like you, just like, you know what I'm saying?
Yep.
But the idea that they're the villain in many cases, they could also be the heroes.
Yeah, you know what, Bill? I would love to dive into this because yes, one thing
Looks like we're gonna have you back.
I know. I was like, dude, that'd be like winning the lottery twice, seriously. But with Zillow, what Zillow did when Zillow was doing Zillow offers, remember we would see that where Zillow would come through and buy one property for ungodly high.
Yep.
But then they would use that as a comp in order to get the neighborhood higher up for their own purchases.
Correct.
Right? And so there was that kind of practice, which when you said it, I don't know. One thing I've never realized how to track because, yeah, I believe there's a ton of people out there, mom and pop investors that are owning and doing the right thing. I just never knew how to track it because I would know agents coming through telling me, hey, I've got a hedge fund guy coming out of California, or it's always New York or California, right?
Right.
And he told me he's picking up 30 a month. And so I'm doing diligence. And he'd show me his list, and they're doing like CMAs on like 100 homes a month. And they're literally going under contract 30, 40 of them a month.
Right.
And I know they were doing it in California and Arizona. I heard all types of podcasts bragging about it. So I was like, you know what? I would love to know what San Antonio's actually real numbers are and exactly who is buying those homes in the last couple of years.
Well, even that concept in itself, let's face it, Zillow was not intended to be a property investor.
Right.
They were dabbling with extra money. Let's be straight honest. Because of you, realtors, they have the money to be able to play around in that sand pit. Zillow is a lead generation company. 90%, I think it's like 80% of their revenue coming in is derived from lead generation. Your money going to put to work to change the market in your area, so to speak.
Yeah.
Okay, so let's see here. I typed in how many San Antonio investment properties are owned by hedge funds versus individual investors, determining the exact property investment properties in San Antonio hedge versus individuals is a challenge due to the lack of specific, however, available information provided in 2021 institutional investors, which included entities like hedge funds, private equity firms, and real estate. According to approximately 28% of the homes purchased in Texas, the highest rate in the U.S. So wow, we have the highest rate.
Okay,
as opposed to institutional investors were responsible for 43% of the home purchases in the same period. So essentially, this is your mom and pops, 43% versus your investment trust hedge funds. I mean, it's still almost double. But I mean, 28% is still a pretty large number.
Oh, yeah.
And they're able to, now I'll give you this, they are absolutely able to take risks like you just mentioned. Zillow, they can go and buy in a home more than what it's worth. Why? Because that was funny money.
Yep.
If they lose, oh well, it is what it is.
Thank you, NAR.
Yeah.
So,
so true. That is so true.
Yeah. Gosh, Mark, that's crazy because you're right. As an investor myself, I mean, I just sold 2 of our properties when the market went up, right? Of course, and we're like, dude, why not? But you're right. Those guys had so much money to play with. They could sit for a 5-year wait period until it caught back up.
Or lose. They truly, it was funny money. Absolutely. When you see the amount of revenue, I look at it like every other week, just because Review My Mortgage is essentially consumer direct education, but it is the form of lead generation for passing along that contact to a trusted loan officer in that area around the United States.
Awesome.
So it's like, okay, this is the right trend that we're on to be able to kind of get into that sandbox. But at the end of the day, they're the Megatron. They're the ones that are creating that market that nobody else really has it cornered yet. So that being said, 2 things that I want to ask in regards to just in general. If you were to give advice to our listeners, and we've got real estate agents, we've got lenders, we've got home buyers, we've got homeowners, insurance people, all that jazz, what advice would you give from a real estate perspective? And then what advice would you give from a finance perspective? Mind you, you're the real estate expert, not the finance expert, but at the end of the day, they, in my opinion, are one and the same when you're talking about this.
Oh man, that's such a loaded question.
It's super broad.
Super broad. And it's like, okay, you're on record now. Remember in 2025, Josh, you said this. Going from my own things where I would tell my clients, even when the market was great, and I kept saying, guys, I know you're seeing all these overbids and everything. If you don't need to buy right now, don't buy. And so I was going against the market, right?
Sure.
And a lot of buyers were thankful for that because then 2 years later, like, we survived, we waited, and then boom, now we're not spending $100,000 over.
Right.
And in this market, I'm really sort of now, I always hated that cliche because realtors every year, it's a great market to buy, right? It's a great market to sell. If you're, first of all, you're trying to time the market, human beings and families aren't timing the market.
No,
things happen to us, right? So you just need to be with somebody that's going to be able to understand all of the data that's there and really just be able to read it for you and break it down so you can make the most confident decision possible. as far as giving those people advice, I would just say just keep in action and activity mode.
Yeah.
I loved something you said on another podcast with another one of your amazing guests too. Just be in front of everybody, right? Videos are where it's at.
Mhm.
Keep doing that, and keep sharing your own experiences, because I really do believe now we're starting to see such a mistrust for the media and everything else, and it's now coming back to almost like you said, real estate is not just one market. We've got micro markets.
That's right.
Well, you are your micro market for your people, right? Your
That's right.
sphere. So be the voice for your sphere. Don't be afraid. Talk about what you're seeing, what you're going through. And I would say that I would challenge anybody, if you're, and I'm talking to myself included,
Sure.
be willing to sound like you don't have all the answers all the time. You're just being vulnerable.
That's right.
And that's the hardest part, even for me. And I get for everybody, is because you don't want to put a video out there and the next day somebody comes out with a different fact. Oh, well, did you see NPR's data?
So true.
And that's the hard part with that social media. And I would just say, even like today, I blasted about CFPB, and I already got a lot of people. It's, oh man, you're on fire. And then somebody's like, oh, but they did this and this just in December, Josh. So what the hell? Yeah. You have to be willing to take that and
That's
just
right.
understand that, look, we're all humans. We're all trying to understand and just navigate through this, and just keep in touch with everybody. That's probably the best thing. Just offer service, relationship, and just be there for those people, because that's going to pay off way more than what your goals are for the year, what your bottom line needs to be. I think that's what I would say.
I think that that's great advice. I think summed up, be true to your brand. And
Yeah.
what does your brand represent? It's you. What are your values? What do you truly believe in? What do you want to hang your hat on at the end of the day? And at the end of the day, we all have to lay our heads down. And are you able to sleep with yourself, knowing what advice you gave, what path you took a buyer down, seller down, the advice that you gave them? Because let's face it, every homeowner, home buyer, renter alike has access to the internet, which the internet, it's right in front of us, guys. You say something that is inaccurate, they're going to call you out on it. And guess what? You've lost your reputation.
Yep.
Everything that you worked for can be gone in a quick Google search, wrong or right, to be honest. So I think that was a great discussion. We addressed short sales. We addressed pre-foreclosure. We talked about the philanthropy that you do. Thank you for all of the work that you do and the words that radiate throughout the audience. For sure, this is going to be a very liked discussion. I'd love to have you back soon.
Oh,
Maybe we'll
absolutely.
get somebody else on here and do a little round table. But thank you for joining us, Josh.
No, Mark, I can't tell you and JC enough. Thank you for even having me and even giving me the opportunity. And yes, I would love to deep dive on some of that stuff. If, bring an attorney involved, a bankruptcy attorney, stuff like
Yes.
that, understanding more of just how to get the right help.
Absolutely.
But yeah, it's been a pleasure. I've known you for so many years, not as close as I wish I did. But this is going to give me another opportunity to do so, and I really appreciate that.
Absolutely. It is my pleasure. Guys and gals alike, JC, if you can share the screen real quick. We are at 20,300 subscribers and growing, and it is all because of you. I want to thank you guys for continuing to tune in, and I promise my commitment to you is to continue to provide expert guests that will be transparent, pull back the curtain on all of the things that are nuanced in way of real estate and mortgage finance. That being the case, guys, we will catch you on the next one.
Trying to become a homeowner is so frustrating. I mean, I wish it were easy to find out what options or things I may qualify for.
There actually is an easier way. I'd love to tell you about it.
Oh, there is. Hold on, let me call you back. Okay, I'm interested. What's the catch?
There's no catch. If you have 2 minutes, I can literally show you now. It's really easy.
Sure, let's go.
Okay. It's going to coach you line by line and have you answer some questions that'll identify the best loan products for you, starting with the property address, which is specific to the area which programs will work for you. It's going to guide you through a series of numbers, loan options, and give you everything so you can choose what works best for you.
Well, I had no idea there was so many options out there for me. It was so easy, it was so quick, and you didn't even have to run my credit.
I know, I told you in less than 2 minutes, right? Did I make it?
You did. Let's go.
All right, let's go.